Did you bring any of your expenses today?
No, I didn't.
Okay, no problem. What let's do is, where would you like to start? Here's what our kind of goal is today. We're going to kind of be in this upper echelon, if you will, of some of these different little pieces of the puzzle. We might still kind of touch some of the other pieces, because what happens is everything from here feeds. Everything feeds in different ways. It all eventually ends up, finally comes here, filters, 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 and eventually kind of ends up here. The income statement, which is your profit and loss, and your balance sheet. It kind of filters up. The reason the flex grid is on top of that is, like Shannon said, that's literally almost like a database on top of the application, or like it doesn't inflict any of the flow that normally happens. So you're hovering above it. You're hovering slightly above it. You guys want to start in expenses or deposits or time clocks, or where do you want to start? What's a fun subject? How about expenses? You okay with that?
Sounds great.
Okay, cool. So really quick, let's talk just briefly about expenses. If we're trying to talk right here, let's talk connections for just a minute, okay? What is an expense receipt? Shannon, can you possibly define an expense receipt for me?
I don't know that I could define it very well, but it's something that your company is paying for, or something you personally are paying out for either services or product or things you've received. I guess even possibly employee time, like things that you are paying out.
I'm going to put a small little arrow, and I know that's not a very good arrow. This is money's coming out of the bank.
Out of your bank.
Okay? Money's coming out, expenses. So your light bill, no problem. Paying for an employee through payroll, that's money coming out of your bank, okay? Paying for inventory, that's money coming out of your bank, okay? Paying for dividends, commissions, etc., etc. Anything that's money coming out of your bank is going to hit expense receipts. If you're paying off accounts payable, purchase orders, stock units, floor plan, customer refunds, like that's all money coming out of your bank. This is basically your tool to get money out of the bank. Okay? Awesome. So what else is it connected to? I'm going to obviously say vendors, right?
Mm-hmm.
Users. You might pay users. Okay? Often they'll have time cards and payrolls. You might pay for reimbursements, REIs. You might pay for splits. We'll get into some splits. We'll actually do some.
Accounts payable.
Which is, accounts payable and splits are kind of the same, but accounts payable is more broader than that, okay? It also includes purchase orders and stock units and floor plans. So this entire side right here is kind of all dealing with the expenses. When we finally do all of this and it takes that money out of the bank and we've categorized it, where does it end up? Where does an expense usually end up on your financials?
On the balance sheet, on profit and loss.
Okay, on profit and loss, okay? So you make your profit, that's called revenue, cost of goods sold, and then eventually you have your expenses that come out of your gross profit, okay? So right here, we hit that. And how does an expense receipt affect the balance sheet?
An expense would take away from the amount of money.
Correct. So your bank is considered an asset, okay? It rides on your balance sheet. But as we lower it by taking money out of that, it actually affects your balance sheet here, okay? There are other ways that you can attribute expenses to balance sheet stuff as well. So you're paying for different pieces and it's just not tracked here. But there's a number of different connections. But primarily, we're going to be right here if we're talking expenses, okay? Great. Let's come up with a scenario, and we'll write it down, and then we'll go do it. Cheryl, I know you have lots of expenses in your business. Why don't you give us a small scenario? And it could be as simple as like, I got to pay a bill, or I just got an order in, or there's a lot of different ways. Maybe what we could do is we could even list some things. That way we could pop through there and make sure we cover all of the different ways that money could come out.
Okay, so...
Let's just brainstorm. How does money come out? Okay.
So I just ordered some more herbs, and so that would be money that would come out to pay for that.
Okay.
I have to have containers that the herbs would go in, but I also have something that I'm going to be calling a service charge, And the service charge, I'm going to have cheesecloth and paper towels, and I'm not going to track them in inventory.
Okay, correct. So this is non-tracked items, okay? Perfect. What else? You're probably going to have to pay some bills, utilities, or...
Right, utilities, that type of thing.
Okay, what else?
There's also some tools or supplies that I get that I'm not going to track in inventory, but I'm also not going to use up, so that may still be in the supplies.
Okay, so are you purchasing like an asset?
Yeah, like bowls or a slow cooker, crock pot type of thing.
Okay, so let's just call that kind of like...
tools maybe?
Yeah, like it's almost like supplies as well, okay? Like
Okay.
depending, or you could even have subcategories underneath that. Like, what are some of my tools? You want to call it tools or something like that?
Yeah, we can call it tools. I usually do supplies. If I do office supplies, it usually means I use them up. If I do tools, it usually means they're low expenses, but I keep them around and use them multiple times. That's just the word I use. And then probably the other thing that I would use would be, we already did utilities, that would be the phone. How about a web? I need a web page. So then I'd have to have a web page, web service, type of thing.
Perfect, perfect. That's great. That's great. Okay, so inside expenses, ideally what you want to do is you want to create some little cans. So I'm going to show you this right here. This is how I recommend that you kind of do. You can see all these little Pringle cans right here, just stacked up all over the place. Okay, if you can think, I need to categorize my stuff into Pringle cans. That's kind of ideally what you're doing. Okay, so what you would do is you would technically say, okay, how do I spend my money? Okay. And you would create those little items as far as like what you want to physically call them, okay? Another little picture that would work really well is these little cans. You can see how they have just some yarn in them, okay? But imagine if each one you're stuffing different things in, okay? Like, here's all your Pringle cans, but you're literally stuffing things into that. And then your goal at first is just stuff it in the correct can. And then later on when you want to pull your financials, we'll do a roll call on those cans and say, okay, what do you have? We don't even really care at the first part. Your first job is just stuff it in the correct can. Does that make sense? Mm-hmm. Okay, and then eventually, we're just stuffing. That's called operations, okay? Even though we're dealing kind of with the accounting portion of it, we're just stuffing to the correct cans. Then when we pull our financials, now we're like, okay, I need all of that to rise to the top. I now need you to be accountable for where I stuffed you into the cans. It's all date specific as well. So,
and how much is there?
How much? Yeah, correct. So that kind of turns into what we call a roll call. Alrighty? Perfect. So now we kind of know where we're going to go. Let's actually go find a little play site. How about we jump into Amber's books? Are you okay with that? That's fairly similar to kind of where we were at there. Or is there a different one that you wanted to do? You want to do bowling stuff? Do you want to do, here, let's get a different color, just for fun. We'll go into bowling, okay? So I'll bet you they have a whole bunch of items in here as far as different things. So first thing let's do is let's go take a look at the expense receipt homepage and see what categories they've already set up, okay? So what I'm going to do, this is not the interface that I personally want for this one, so I'm going to hit Chooser, and I'm going to say, you know what, I'm going to use the map today for my default interface. So now when I go home, I'm looking at a map interface. I'm going to go to Expense Receipts, and I'm going to click right here on the classifications. What are my expense types? Click. If you're familiar with kind of old school accounting, there's a thing called Chart of Accounts, okay? This is actually kind of a funny history lesson if you want, but watch this. If you look up at the name of this particular page, Add Edit Chart Accounts, okay? Originally, if we were to look back in time and tell you when this actually was happening, probably in the mid-2000s, we were headed towards, okay, we better call it Chart of Accounts. But because we built it step by step instead of all together at once, we're like, okay, there's a temporary message on the top of that page, and it's kind of funny. It literally says, we'll probably circle back around, but temporarily we're only using the expense types and the deposit types. we're not even going to do the rest of it because then you have to like be able to connect it all together. Well, as we did it, we only ended up needing those ones, and then eventually we added one more for balance sheet stuff. But all the rest of the pieces that normally you would consider your chart of accounts, we were able to virtually map to on the fly. But that's just kind of a funny little piece of the puzzle. Like, we were headed in this direction, but because we didn't do the whole thing at once, we ended up being like, oh my goodness, we don't even need that for these other little pieces. And so that's what kind of, it changed a little bit of the flow, okay? So let's take a look at what they've got. They've got an I'm not sure. Here's kind of an important piece to know about expense types, okay? So I'm on the add edit expense types. This is a permission that you have to have turned on. When you come down here, you have different things. IS, what would that stand for? Income statement, okay? Watch this. What does BS stand for in a nice term? Boy Scouts, right?
Balance sheet.
Balance sheet, balance sheet. That's a bunch of BS. So normal expenses. And then basically what I'm trying to show you here is it goes 5 levels deep, okay? Watch this. Balance sheet, special expense, balance sheet item, what's your subgrouping, and what's your this, okay? So here's your full things. I'm gonna switch just so I can kind of show you what happens. What this does is this allows us to detail out your P&L. So if I click on this right here, here's what we have. We have a destination. Is it IS or BS, okay? Income statement or balance sheet. And then you have your category, okay? Is it normal? Is it special? Is it cost of goods? Like these are like kind of the next level down, okay? And then you have your groups. Is it people? Is it whatever? Is it whatever? So under people, you would then get into your subgroups, okay? So if I go down and I see people, I currently have wages under people. So IS, normal expense, people, wages, and then the next level is where I actually create the physical account where it resides, but that would be something like salesperson wages, my accounting department wages, like whatever you wanted to break that down into. Does that kind of make sense? It's a 5 deep level, but if you can think on that, it'll help you. And it literally goes, what's my destination, what's my category, what's my group, what's my subgroup, here's my subgroup, and then finally, what's my physical actual account type, okay? So let's take a look real quick here. Inventory. I'll bet you we already have one of those in there. Let's take a look. So I'm going to scroll down and find inventory. So it was balance sheet, special expense, inventory, inventory, inventory. I had to go 5 levels deep, but I didn't necessarily need to specify that. So I already have an inventory one. If I needed another one, I could specifically be like, oh, this was when I was paying for this kind of inventory. This was when I was paying for this other kind of inventory. If I needed special categories, I could add it. Yes, Cheryl.
Okay, so the subgroup was inventory, but then when you got down to the sort, that's where you specifically name.
Okay, correct. I'm actually going to jump
like
into
web inventory and in-store inventory, or if you wanted to
only
separate
if
that.
you needed to separate.
Right,
that.
I'm just saying as an example.
Bottles, that kind of.
Okay, it depends on how detailed you want to be, okay? Because here's what happens inside of Atlas, and I need to kind of explain this because otherwise you're like, traditional accounting, you had to have, everything had to have a chart of accounts, okay? And we still allow you to put your stuff into all the different little cans. We're going to go back to this real quick because we're going to talk about it, okay? You have tons of cans and you create your little cans. How do you want to categorize certain things? Well, certain pieces in Adilas, what happens is, you know how we drew some little arrows and they were flowing up from the top? If I have general inventory, so say you get a vendor and a PO and it lands in general inventory. Well, guess what? As soon as I have general inventory, it filters itself up here to the balance sheet to say, guess what my inventory level is? This is an automatic feed, okay? So when I pay inventory off, guess what's already happened? I already am able to track that up into the balance sheet. So instead of being a rigid, hardcore like, oh, I've got to do this right here, it's already being naturally flowed through because we know it's processed, okay? And so a lot of times when you actually see a destination of balance sheet in an expense type, what happens there is we're like, okay, cool, that we either need to assume that that's automatic or I need you to bounce off into your own user-maintained balance sheet item and then track that extra piece, okay? But basically, if we're able to already map to that piece, you don't have to necessarily like, ooh, where's that show up in my balance sheet? It's an automatic feed that's coming in, okay? But you're able to still track your pieces if you wanted to pull your reports. What did I pull here? Once again, it kind of comes back to your goal. What is your goal, okay? Like, I'm not trying to make it sound weird or funky, but like, what we're doing is we play the law of deference, and we talked about that just a little bit, okay? But we play the same thing here. If I have a vendor tied to a PO that adds inventory, and I have all the different little items that are listed on this PO that are kind of attached, imagine this little attachment right here between a PO and the general inventory pool, okay? I've got tons and tons and tons of information. However, I paid one expense for $5,000. Guess what we're going to do? I'm going to defer to this because I have it fully detailed out. Was this product, services, which pieces was that? Like, once again, I'm going to play a law of deference because this has more information than the $5,000 little single line entry. $5,000 in a PO could be hundreds of line items potentially, okay, with all sorts of details. What categories are they in? How's it affecting my inventory? That's why we're paying a little bit of I defer to somebody who has more information, okay? So sometimes certain balance sheet items are tracked that way inside of Atlas. Inside the balance sheet, it's actually split, okay? Just so you know, you have automatic, which is called system maintained. As I play, it flows up. As I play, it flows up, okay? That's called system maintained. You also have a whole other little section that's called user maintained. So for instance, say I know you're going to get a little capsulator thing. It's basically you can put your little herbs and all your little tinctures and different things and create your own little pills, okay, or whatever the little thing is. So that little item, say it costs you $1,000, $2,000, something like that. Well, that might end up being an asset to your business, okay? Well, where are you going to track that at? Guess where it goes? The user maintained portion of the balance sheet. You have to physically add that as a separate item. It's not down here in your inventory at all. It's literally, it's the company truck, it's the company building, it's the company, that's called a user-maintained balance sheet item. Guess what happens if you get a loan? User-maintained balance sheet item, okay? You just have to realize that certain things will flow automatically after that, and that's called a system-maintained item. And then there's other pieces that you have to do user-maintained, and that's where it takes just a little bit of work on your part. But basically what it is it's stuff that we don't know what you're going to do, okay? Not every company has a company vehicle. Not every company has a huge big loan that they're trying to pay off, okay? Like you have to kind of tell us those pieces, and that all goes into the balance sheet under user maintained versus system maintained. Perfect. Okay, so we were kind of just looking at expense types. Let's jump back in there real quick. Our first one on our list was inventory. Let's say that we have that right now. Supplies. Should we go check it out? I bet you we probably already have one for supplies. We'll just jump back into expense types. We'll come down. I'm looking for the word supplies right here. Here's outside services, supplies. Okay? It's income statement, normal expense, semi-fixed expense, supplies and supplies. Did you want to change anything, or are you cool with supplies? Awesome. So now what we're going to do, utilities. Let's see if we have utilities. Oh, looks like they already put utilities in here too. Like you can, by default, we give you like 5 just to kind of start out with, and they're generic, okay? But you build this. You tell it literally what you're doing inside of Atlas is you're going like this. Guess what? I give you 5 by default, but I want, what do you want to track, okay? And it depends on the business. If it's a super simple business, they might not have that many, but they might. What are you doing for your advertising? Is this referral marketing? Is this, are you paying your commissions out? Are you paying external labor? Are you paying, it depends on how big your company is and what you do to how many cans you set up. It's literally just like inventory, okay? So you just kind of think of the reverse of inventory on expenses. You're creating little cans or placeholders where you can stick those values in. Awesome. So what's the next one we got? People. Let's see what we have under people right now. So I'm going to kind of come down and look for wages. Okay, they put a whole bunch of different ones in here, and we may or may not want these different things. do we want just wages, or do we want to, let's create a new one just so that we can kind of have one in there, okay? So they've got some, and who knows what they've got. They've got all sorts of different little things kind of for some tax type stuff. And it depends on each company. They can play however they want. What do you want to call your people wages? How about sales staff? Because we're in a bowling pro shop right here.
Okay.
How about we call it sales staff, okay?
Okay.
Something like that. Awesome. Are you okay with that? Mm-hmm. Income statement, normal expense, people, wages, sales staff. Add the account. Click. So now if I come down to wages, you can see sales staff is now part of my wages category. Okay. Let's check what else we have. Okay, tools, multi-use. Now you said this is different than a supply. This is kind of something that you're like,
well, that's just the way that I do it. If I've got office supplies or things I bring in and use up, I'm continually having to replace. But the tools that I use are the ones that, like a capsule maker. I buy it if I have a small capsule maker.
Sure, sure.
I buy it, or bowls, or, you know, the crock pot to make the stats. In other words, I bought it, they're an expense, but they are continually used again. I just usually separate mine too.
Okay, great. So let's go find some supplies type thing. If you don't like the descriptions that we've kind of provided here, look, this is going deep. 1, 2, 3, 4, and then when I finally do it, I'll get my fifth one. If you don't like these or you want to change them, click. Right here, you go back to the manage the groupings. It goes up at those other levels, okay? And then you can physically create whatever you want to do. What you're doing here is you're saying, how do I want it to look on my P&L? We're going to go play with it so that you can see where it actually looks at, okay? So I'm going to click here. I'm going to find supplies. Here's some supplies. Are we okay with semi-fixed? We're not sure. Okay, what's the difference between a semi-fixed and fixed?
Well, would fixed be something like you're paying for a website and it's so much per month?
Okay, so I would say that utilities are often fixed. You have a certain,
Okay.
Can you control that? By maybe turning your lights off, but like it's kind of a little bit more rigid. Something
Right.
that's like kind of like, oh, I may or may not do this. Postage, can you control postage? How much are you mailing out? Like you have a little bit of control on that, okay? And don't get too hardcore on this, but basically it's just kind of, there are almost some traditional pieces that we're pulling in. Some people are, oh, that's a fixed cost. Oh, that's a semi-fixed cost. The lease on your building, the rent on your building, okay, that's a fixed cost, okay? No matter what you do, even if you turn your lights off, you're still going to pay $1,000 a month, okay? That's called a fixed cost. Versus like, oh, what about my food and meals that I give to my employees or something like that? That's semi-fixed because you're fluctuating with it, okay? So let's go ahead and go on to supplies. And let's call this tools supplies. Are you okay with that?
Yeah.
I keep spelling tools wrong. Okay, so what I'm doing here in the description, just so you know, these little pieces, your groupings and your account names, we're going to be using this all the time, This is inside of Adilas. This description is just for you in case you're like, what in the heck was I thinking? Like, say you misnamed it, or you, instead of doing something like this, this is kind of interesting. Did you know that old school accounting would go something like this? Okay, they would have a numeric value and maybe even a -1 or something like this. They needed a description to be like, what the heck is 9990999? Like, because they had these numbers. What it is behind the scenes, we're going to create an ID number for you. It doesn't even matter. We're going to say, why don't you read English? We'll manage the numbers in the background. Okay? So you don't even use what's called the standard chart of account numbers. Like literally they had a number. And what it was is because it was a paper model, they had to kind of do some shorthand. So instead of saying my semi-fixed expenses that were called the office tools, and I had this, they're like, it's going to be so much quicker if I give it a code name, an alias. You're going to be 00776, okay? So anywhere I put 0076, I can now find it instead of putting up this big old huge long name, okay? We're actually letting you go 5 levels deep, but in the old school way, because they did it on paper, they used those quick little ID numbers, and that's how they kind of did it. But then you had to have a cipher or a code. Like, what is the legend on this thing? What does 00, what does this mean? What does account number 2000 mean? Like, it was very ambiguous because it was just numbers. So we've totally erased that whole part of it, okay? Yes?
So obviously, the normal expense then is part of this category. What do you have, normal expense, abnormal expense? What is normal expense?
Okay, great, good. I love it. Let's finish adding this and remind me about, we're going to go talk about what is normal expense. So we already know what IS is, okay?
Yeah,
income statement. So there's 3 different things that we have categories here, and we'll talk about it in just a second. Or if we're here right now, like I haven't really done anything. Like watch this, I'll just go Control X so I have that. Wow, I lost 3 words. Let's go up to Manage Account Groupings. Here's what you have, okay? Under your categories, you have 3 different options. Cost of goods sold, a normal, and a balance sheet one, okay? So what this does is, look at this, IS and IS. Do you know where these things hit on your income statement?
Well, cost of goods sold is you take all the amount of money you spent for goods, and then at the end, you say how much you have left, and so that's how much, because you don't want to take it all off because you're still sitting there with an inventory, so that's an asset.
Okay.
So what you do is I bring all this in, it becomes an asset, but I also want to take the expense off that I spent for it. So when you do cost of goods sold, you take that away from what you paid for all of your things that you bought, and then that tells you what your inventory is.
Awesome. I'm going to go turn on a permission, okay? If we're going to be talking financials, we're going to play just a little bit, okay? Watch this. I'm going to go to users, and I'm going to turn on a permission. I'm going to find, I'm currently under Adilas demo. Go ahead and click on it, and I'm actually going to go to System Basics. I need a new little calculator, okay? Financial loan, nope, the financial flow calculator, okay? So what this is kind of a little concepting place between P&L and balance sheet. So I'm going to turn on my financial flow calculator, go to the bottom of the page, hit edit. I'm going to go back home, and I'm going to show you just a small little thing. From the map, I'm going to go tools and maintenance. If you were on the classic homepage, system basics are listed out in a list, okay? But if I click on tools and maintenance, this is what the list looks like on the classic homepage. But I wanted to go right here, financial flow calculator, okay? So here's a quick little breakdown, okay? Watch this, okay? So, we had 3 different expenses. One of them was cost of goods sold, okay? The other one was just what we call a normal expense. The other one was balance sheet expense, which basically would come over here onto the balance sheet portion, depending on where we put it. Often, it's here or here, but it could be here. Like that, when you get into technical accounting, it gets a little bit interesting. That's the 3 different pieces. Cost of goods sold versus expenses versus a special one that I'm going to attribute myself. Or inventory that automatically gets flowed in because it's held in assets. What do I have? Okay, what do I still need to owe? Like, if I got a brand new PO in, and maybe I don't know how deep you want to get into it, but basically, like, what this little worksheet is here, this basically has a number of different little fields where you can kind of put some values in and kind of play with how do things go back and forth, okay? And as you change things, it changes numbers. It's just kind of like flow, or for teaching a portion of something, okay? So watch this. Let's say that we have a little PO, okay? Eventually we're going to have to pay for it, okay? So let's say we had a PO and we got a new little piece of inventory in. How much did we get in? Just give me a number.
$500.
Okay, watch this. I'm going to go like this. So we create a PO. This is what it does behind the scenes. New inventory, $500. Okay? No problem. That's an asset. You have new inventory. Okay? But currently we're out of balance by $500. Okay? What else happens? Did we pay for this or do we still owe for it? We have to make a decision here. Okay? And then basically what happens is we have to know how things are going to play. Okay? So do you want to say that we haven't paid for it yet?
Sure.
Automatically it would hit your liabilities, your AP waiting room. Okay, this is accounts payable. So that $500 just went here in your accounts payable automatically. So as soon as I move out of this field, oh sweet, I'm happy, I'm happy, I'm happy. Okay, all you did was you brought in $500 on a PO, and you said, I haven't paid for it yet. So automatically, I'm tracking both of those pieces automatically. No entry is needed. We need to add a PO, and it literally would take it to that level, okay? Like, as soon as I add $500 worth of inventory, what actually happens right here, let's do the $500. I'm going to kind of use my marker so you can follow this logic, okay? I know I need to get a PO for $500, okay? It's tied to a vendor. I eventually ended up with $500. Let's pretend that this is $500, okay, worth of new inventory items, whatever they are. Automatically, because I haven't paid for it, guess what it did? Oh, I better create a connection here with my waiting room, okay? Guess what it also automatically did? My assets in my balance sheet automatically went up. Because of the inventory going up, I now had a thing that floated up to the balance sheet and said, oh, just so you know, my inventory just went up. But this accounts payable also shows up in the balance sheet automatically because that's part of your liabilities.
Okay,
We've got to pull it tracked. Correct. So if you enter one single PO, guess what you just did? It's cause and effect relationship. Remember how we were talking about that yesterday for stories? Literally, one PO, it comes in. If you want, we can even do that right now if you wanted to see where these pieces show up. Would that help you to kind of see it through that whole process?
I'm fine because I've
Okay.
seen it, so I don't have to unless you want to show something, unless somebody else wants to do it.
Okay. Basically, what I'm trying to do is just kind of show you where some of these pieces are. Your main question, we kind of diverted, but you're like, what is a normal expense compared to, so normal expenses, they actually hit at a different spot, okay? Maybe what we should do, just so we don't, like we were kind of like popping through here and like loading all of our categories. Do you want to keep loading categories, or do you actually want to follow one of these things all the way through the process? We can go wherever, kind of depends on what you guys would like to do.
I don't care either way. I assume at one point we're going to have to go back and see how it flows through anyway.
We are. It just depends on where you want to jump.
Add everything first, and then
well,
we need to add everything first so that when we do it, everything's there.
That's called prep. Okay, I would recommend that just because that's where you're prepping things. Okay, so what we're going to do is we will come back to that, and if I don't remember, please remind me. Okay, I want to show you how that's automatically flowing through. Once again, this right here, it doesn't hit any sort of database. If you're using the financial flow calculator, it kind of helps you figure out, like, okay, where did that go? What happened? Oh, yeah, I forgot to deposit that. You know, like, it kind of shows you where some of your pieces are, and we help it to teach. It's meant to show people teaching how things flow. Okay?
Okay, so it's kind of a little thing that doesn't connect to anything.
It doesn't connect to anything. None of the values entered here are recorded in the database. So literally, if I wanted to, I could be like, hey, you know what? We had some equity with the starting, this is our startup funding, you know. Okay, and that was, say I started with $5,000. Boom, okay. Okay, so all of a sudden I'm out of balance, but what would happen is the P&L here would basically kind of say, hey, I have $5,000. I probably had to put it into a bank, did I not? Bank, $5,000. Okay, boom. Okay, I'm back in balance now. Here's my starting funding. Here's my bank. Here's my little inventory. I can just kind of play and I can flip-flop some stuff. Like, you could be like, oh my goodness, where did it go? How did I get it back into balance? Okay, my new inventory. Say I sell something. Okay, sales. How much of the 500 did I sell? Okay, watch this. $250. Is that our cost, or is that the price that we physically sold?
Price we physically sold.
Okay, great. So watch this. I have $250 here. Watch this. I come down. I'm currently out of balance a little bit. Now, are there costs of goods? Did we know what the cost of goods were? How much of that 250?
125.
125.
Good, Mark.
Okay, so guess what? I now would need to reduce this inventory by $125, okay? So watch this. I'm going to just put take out of inventory. And this would be a negative, actually, because it's going to reduce that little piece of that. So that would be a 125. We do a lot of the stuff automatically behind the scenes, okay?
Basically, this is double entry accounting.
This is kind of how it works, but we're trying to show you how it flows in some of the different ways, okay? Because this is the standard that the banks require us to get back to, which is called the P&L and the balance sheet. These are financial documents that are kind of like industry standard. They are 500 years old, and potentially they might be replaced, but currently that is a piece of tradition that we have to kind of play with. So what we do is we simulate double entry accounting by automatically flowing things from station to station. We use objects and data over time, and we pass it in almost like a production style, what is that called? A production line. An assembly line for data, okay? So watch this. I'm currently actually still out of balance here, okay? Guess why? I got $250. Did I actually deposit that in the bank, or is it just still sitting in my cash drawer? Okay, so eventually what would happen right here is I'd actually have to add $250 to my bank through a deposit, okay? Does that make sense? We sold it. We knew our cost of goods sold, so we deducted from our original inventory. We added that $250 back to our bank through a deposit, and we now are perfectly back in balance, okay? Does that kind of make sense how things are happening? Well, what we do is we try to help you out so you're not having to be like, oh, crap, did I move that? Oh, crap, did I move that? Like, literally, our goal for you is, like, load it into the cans. We'll pull the thing. Like, there's a ton of it that we can automate for you instead of you like, okay, do I need to move this over here? Should I move this over here? Should I do this? Because it's linear and it's being a progression and it's all time-stamped and date, we can literally move that whole section. Did you know that the only thing that I would have physically had to make an entry for here is this little guy so far? My startup funding and my initial deposit in the bank. Everything else that's happening would have already flowed through your accounting just like that without any questions, problems, anything else, okay? You still have to babysit certain parts of it, but we're trying to help and automate this. We're taking, instead of it being like, oh my goodness, I have a degree in accounting, and I'm like, they have this thing called T accounts. And I'm not going to try to go off on this, but literally, this is the old-fashioned way, okay? You had your debits and you had your credits, and they were going your negatives on this side and your positives on this side, and they were going bounce, 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 or they had multiple T accounts and trying to be like, okay, I negative from this one, so I'm going to have to positive, 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 you know, wherever you were bouncing your other pieces. It was a paper model is how they were trying to track all of the stuff. Here's how Adilas tracks it. And you put checkpoints, and you do permissions, and you timestamp, and you virtually come back in time and you're mapping to these different checkpoints and levels, okay? I entered the PO, it existed in inventory. Whoa, all of a sudden, some of it left inventory because it went on an invoice, which I have all the details of that. Whoa, this invoice has this much money. I then deposited. Like, you're not doing any of this. But we can kind of simulate it because we know where the little checkpoints are. What's the little holding tanks? Does that make sense, kind of where things are going? It's totally different mentality. It's totally different mentality. I think it's fun, but...
It kind of reminds me of the story you told yesterday about having an idea, and so you had to take off your backpack and get into your first aid kit and find a pencil and find a piece of paper where Dad just took out his phone and just typed the voice activated.
He did voice to text. He was just like, you dream it up, we'll wire it up.
Yeah.
And then he was going to try to send it, but it couldn't find signal. Like, literally, it's that different of a mentality.
Yeah.
I was looking for a paper and a pencil, and I had to stop and take stuff off, versus him not even have to touch anything other than pull his phone up and automatically getting ready to send it. Like, things are changing, and so this is kind of where things are going. Anyway, we might bounce back to this little page, but hopefully it kind of shows you what's going on as far as the different flows and pieces, okay? Shannon.
Off-topic comment from online, but it says balance sheet worksheet instead of worksheet.
Oh,
yeah, it was just someone's spite. So I just thought that's an easy fix. Just put an R in. So I thought I'd tell you.
If you watch any of my tutorials, you'll be like, how does this guy even spell his own name right?
Do you want me to write a note of that?
I've got it right here.
Okay.
Worksheet. We're actually a Wookiee, and so it actually works really well. We're Star Wars Wookiee people. So here's what they're saying right there, the Wook sheet.
Yeah.
Perfect. It's going to stay that way. I'll change it tonight.